What if I told you that $70 trillion of American wealth doesn't actually exist? Every day, headlines scream about Apple or Nvidia hitting trillion-dollar milestones, making it sound like there's a vault full of cash somewhere. But here's the truth. Market cap is a myth. It's a snapshot of a mood, not a balance sheet. Today, we're looking under the hood at the massive oversimplification that leads most investors to make very expensive mistakes. Just a note before we start. This video is for educational purposes only and is not financial advice. All investing involves risk, so always consult a professional before making investment decisions, as we cannot take liability for any financial losses.
Now, before we tear it down, we have to understand how it's built. In its simplest form, market cap is just a basic math problem. It's the latest share price times the total number of shares. That's the market cap. It's as simple as that. Let's look at the heavy hitters as we move through 2026. Nvidia is leading the pack at a staggering $4.5 trillion. Apple is sitting at $3.8 trillion. Amazon is at $2.5 trillion, and Tesla is at $1.4 trillion. Even the smaller companies in the S&P 500 have a median value of around $39 billion. To put those numbers in perspective, all U.S. stocks combined are worth about $70 trillion. All the world's gold is worth $31 trillion. U.S. Treasury bonds are at $30 trillion. And all U.S. real estate? That's a massive $100 trillion.
These numbers sound astronomical, but they are also theoretical. See, market cap is based on the price the very last person paid at the close of the market yesterday. The math assumes that every single share is worth exactly what the last guy paid. But it has nothing to do with what you paid 5 years ago, and it has nothing to do with what the next person will pay tomorrow. Let's look at Bitcoin. Recently, its market cap was quoted at $1.6 trillion. Does that mean $1.6 trillion was actually invested into Bitcoin? Absolutely not. Think back to the beginning. Satoshi Nakamoto, the so-called mysterious founder, mined millions of coins when they were worth zero. Some people paid $60,000 for a Bitcoin. Many people paid $10. Satoshi paid $0 for his share of Bitcoin. Yet, market cap treats every single one of those coins as if they are all worth the current top price. It's not a measure of how much money is in the system. It's just a snapshot of the market's current mood.
Imagine you live in a neighborhood of 100 identical houses. Yesterday, your neighbor sold their house for $1 million. According to market cap logic, your neighborhood is now worth $100 million. But is it? What if 50 of you tried to sell your houses at the same time? The price would crash. What if the person who bought your neighbor's house was just one crazy investor willing to overpay? When you see that real estate is worth $100 trillion, it sounds solid. But just like stocks, that's a made-up figure, unless you plan to liquidate every single house and office building in America right this second. So, the next time you see a headline shouting that trillions were wiped off the market, I want you to take a deep breath. Nothing was actually wiped out unless you sold your shares at that exact moment.
Market cap is a tool for commentators to make things sound more dramatic than they are. Your portfolio value today is just theoretical worth, unless you're about to hit the sell button. Don't let a $1 trillion headline scare you into a bad decision. Always consider the source. Is the person quoting these numbers trying to educate you or just shock you? Now, I'll pass it over to peer review Pete for a different perspective.
Thanks, John. Look, it's hard to argue with the logic. It is a simplification, but we still need some way of comparing relative size. How else can we compare the massive influence of Nvidia against a small-town bank? Market cap gives us at least a rough baseline for discussion. Also, prices aren't always set by one crazy person. In the real world, prices are managed by market makers and reflect massive trading volumes happening every single minute, although admittedly, prices do change over time. Market cap might be a gross oversimplification, but in a complex world, it's a possible shortcut.
Great insights, Pete. And as always, remember that this discussion is for informational purposes and isn't direct investment advice. And if you want the ultimate guide, I've compiled a deep dive analysis of all 30 videos in this series into a single comprehensive guide. You can find the book on Amazon using the link below. It includes the detailed charts and historical timelines. Once you've grabbed your copy, I highly recommend staying right here on the channel. You can check out our next 2 sessions linked on the screen now. The 2000 dot-com bust, a forensic look at how the slow elevator first appeared, the 2008 financial crisis, an in-depth study of the rocket recovery and why it happened so fast. Thanks for watching, and I'll see you in the next video.